David Daoud of Compliance Standards. Today is November the 14th, 2024. I am pretty encouraged about Ingram Micro's third quarter results, although the company's leaders did not share the details about their lifecycle business, where the IT asset disposition services sit. Comments they shared with a group of analysts validate the results of our survey, confirming again that asset recovery services are doing very well. But first, let's look at the basics. Now, Ingram Micro went public just recently. The IPO was launched shortly after it filed its S-1 form with the SEC. I did anticipate the IPO to take place in the first quarter of 2025, but the company moved very swiftly and went public earlier than anticipated. Now, part of the motives for going public was obviously to reduce Ingram's debt. As expected, it used a portion of the IPO proceeds to pay down its debt. In general, the company is still experiencing a difficult revenue position, although things are generally moving in the right direction. Data for the third quarter shows net sales were down 1.4% year over year to $11.76 billion, with the culprits in this decline being the Americas geo, which offset net sales growth experienced in the Asia-Pacific region. Everyone with a global presence that we track are confirming again that Asia-Pacific region is the strongest geography. And those of you with global ambitions, clearly you must definitely consider an Asia-Pacific position. Ingram, however, reported an improvement in its gross margin on the year-over-year basis, reflecting essentially a shift to higher margin products and solutions. Specific to its business categories, the company essentially reported weak performance for its client and endpoint solutions business, essentially confirming the weakness of the PC and smartphone markets amid delayed refresh projects, as the company reported. The company also acknowledged the difficult environment for its advanced solutions comprised of enterprise-grade hardware and software and related services. In contrast, the company noted that it produced double-digit top-line growth in cloud and other categories. For the lifecycle business in ITAD, the keywords here are, and I'm quoting, other categories, end of quote, confirming what our panel of CEOs and executives told us and what was also reported by Iron Mountain. Both cloud and asset recovery services have been sort of the shining sectors for many companies that we track. Now, these pronouncements represent perhaps early indicators of a 2025 PC refresh cycle. Ingram already stated that what has been a headwind for PCs and smartphones may turn into a tailwind in 2025, and it's likely that ongoing asset decommissioning projects are meant to clear the way for new systems to be deployed. Regardless, I believe Ingram is poised to enter 2025 with a positive momentum, in particular as it expands the use of its Xvantage platform, a platform essentially meant to increase automation, raise productivity, and improve efficiencies. While declining to forecast 2025, the company is already projecting fourth quarter net sales up 2% as a midpoint for a revenue range of $13 to $13.5 billion. If achieved, this would be a great way to end the year, since the third quarter ended with minus 1.4 revenue decrease. Until our next talk, thank you and goodbye.